this is Chelsea Pagano with Chelsea Pagano and Associates. I have Ryan Grant here with us. We just want to be here to answer all of your questions, guys. I know there's a lot of uncertainty out there in the marketplace, and we just want to make sure we answer all your questions. But most importantly, we really hope you're safe and healthy and being very precautious about, maintaining a good hygiene and health out there right now. So we have some questions here for Ryan. And Ryan, if you can let us know, what do you see that's happening with the rates and the differences between the federal fund rates and the mortgage rates? How do the two work together?
Yeah, Chelsea, thanks for having me on. And we are excited to share this information because we're getting a lot of questions from the community as a whole. Mm-hmm. And so the Fed funds rate is the short-term cost of money, right? It's credit cards, it's home equity line of credits, it's anything that would be tied to what's called the prime rate. And when you see the Fed funds rate goes to zero, a lot of people think, well, should mortgage rates be at zero? In reality, the Fed's the only person that can borrow at 0%. Right? We as humans have a little bit more risk, right? So there's a little bit more margin there. Now, what happened is when they dropped that, the money basically flies out of the stock market, which is why we've seen the stock market, take a dive lately, and it moves into bonds, right? Because bonds are safety, right? It's the most treasury bonds and mortgage-backed securities. They're typically very safe bets where you're not going to make a ton of money on your investment, but you're going to make a good return. Now, what's happened there is that most people would think, and I'll share my screen here for a second, but most people would think that means, well, interest rates went really low. Well, they did for a short period of time. Mm-hmm. So as you can see here on March 9th, interest rates were the absolute historical low they've ever been. We were seeing 3% 30-year fixed rates. We were seeing high 2% 30-year fixed rates for some situations. 15 years were in the middle 2% range. Mm-hmm. And a couple things happened. One is that as the coronavirus information and the outlook looked more bleak, all money kind of pulled out of the market, right? So nobody wanted to buy mortgage-backed securities anymore. The mortgage industry wasn't well staffed enough to handle the amount of business that was coming in. Normally we'll do about $1.5 trillion a year. This year is expected to do $9 trillion with rates that low. So there was just no way that mortgage companies could capacity-wise handle that. And then we lost all of the back end money that was supporting mortgages. And so as you can see here, rates actually went up pretty drastically to like their 18 to 24 month highs. And that confused a lot of people. You can see here, we're updating every couple minutes, but it confuses people because they're not sure what to do, if they should refinance, if it still makes sense, if they should buy a home, if they should sell a home. So that's what we're here to talk about today. You can see this green line here means we had a really good day today. And that was because some of you may have seen the Fed stepped in to buy even more mortgage-backed securities and bonds yesterday with their quantitative easing bailout. And so interest rates actually got quite a bit better from the last couple of days. And if they continue on this trend, we could continue back in that direction. So long story short, there's a lot of volatility. As you can see, our normal life looks like this, very small little movements, which makes our life a little bit easier. This makes our life really tough, right? And it makes people— Sure,
of course. It creates a little uncertainty, like you said, right?
Yeah, and it's confusion, right? Like, why, if this is happening, if rates are zero, why are mortgage rates at 5% or 4.5%? So, the key is just to get the information as it pertains to you as a homeowner or prospective homeowner,
sure.
To really understand how it impacts you one way or the other. And so we're happy to help your clients do that.
Okay, no, that's great. Thank you. That helps clear some things up.
Yeah.
Now I have a couple more questions for you. So what are you seeing on the mortgage side? Is the volume dropping or staying steady?
Yeah, it's a great question. So the refinance volume, as you saw by that graph, was picking up drastically, from basically the end of February through the beginning of March, because interest rates were dropping so at such a rapid pace. And then they slowed down pretty quickly. Went over a week to 2 weeks period, interest rates went through the roof, right? And so, and when I say through the roof, I want to use that in historical context. They're still really great. They're just not 3%. And so we saw a slowdown in refinance business, but we actually seen a pickup in purchase business. And the reason why is because really smart buyers right now realize that they can probably get an offer accepted without as many competitive offers
Mhm.
with a still really good interest rate, knowing that it's likely that interest rates will improve in a very short period of time. So they can get the home they want at a better price than they probably could have gotten 2 or 3 weeks ago, and then still be able to capitalize on a lower payment long term. So we're still seeing a pickup in the purchase business.
Yeah. And it's funny that you say that because we're seeing kind of similar process on the resale side. And although a lot of people are choosing to stay safe, and right now obviously we're quarantined and we can't go anywhere, but in the last couple of days we've been getting multiple offers in a lot of our homes, especially under 800,000.
Yeah.
And now this is just going to create an opportunity for people that missed out, for the ones that are a little bit more gun-ho about, or determined, I should say, to want to find that home that they've been missing out for so long, right?
Yeah, it's one of those things where, and I hate to say it, but fear and uncertainty creates opportunity, right? And so
Of
the people
course.
who can face that fear with confidence, and the big key is you have to understand your situation. So there's no one size fits all for this type of environment. It's every single person has to look at their current income, right? Is it going to be affected? And if so, how much, and for potentially how long? Their liquidity. So if they buy a home or if they have to sell a home, how long can they live off of a diminished income or an income that may go away?
Mhm.
So
Sure.
every person is going to be unique, and I would just urge everybody watching this to not sit home and wonder what they could do or what they should do. We are here. We don't sell anything, right? We just give advice and consultation to people about their situation and help them manage through it confidently and with a high level of education.
Right. So any particular strategies that you're seeing buyers or clients take advantage of right now in a particular way or more detailed way? Um,
Yeah, so right now we're looking at helping buyers and sellers come together on using ideas like seller buy down strategies, where the seller, as opposed to not getting an offer, or if a buyer is thinking of maybe not buying a home because of rates, where we can use a combination of seller concessions to help the buyer buy down their interest rate to get them the rate that existed 2 weeks ago,
mhm.
or we're just helping buyers understand that, look, like, if you have to buy at a rate in the fours, know that it's almost a certainty, and I want to stress almost, that rates will get much better over the next 3 to 6 months. Because as you saw on that graph, I'll show you this here. Um, so rates were trending really well here, then they kind of got a lot better, and then they got worse. Now this is an inverse yield chart, but one of the things that's good to look at is this is the Fannie Mae housing report, and this was in the beginning of March. And so
Okay.
if you look here, you'll see, their estimation was rates are going to be 3.5% in the beginning of this year, and then move lower all the way to 3.1
Wow.
for the entire 2021. Now, when this comes out in April, I promise these numbers will be revised and these
Sure.
numbers will be lower, right? So when people realize what's to come in terms of low interest rates, the amount of buyers that will want to be able to afford a home, because affordability will be better three
Right.
months from now or 6 months from now than it has been ever since 2000.
Mm.
And most people don't realize that. They think 2006 was even better. It was much worse back then because rates were 6% in
Sure.
2006.
And that's
And
going to
so,
create a frenzy, isn't it? I mean,
yeah,
everyone's going to jump into the marketplace and want to take advantage of what they missed out and take on the opportunity that's out there for them.
correct. Yeah. So, this is where, you'll be able to get, as a seller, you'll get multiple offers,
Mhm.
but it may take you a while to get there. The buyers will have a real hard time getting an offer accepted because of already low inventory. So, we just want to make sure that people understand they can get into a home now, even though rates aren't the lowest they've been in the history of mankind, knowing that the expectation is they will show up as soon as this market somewhat normalizes.
Sure, of
So
course.
just helping people make smart decisions around that is what we're trying to help them accomplish, keeping in mind the short-term issue they may have with, income or liquidity.
Right. And guys, we're not out there trying to say, buy now. I mean, we're all sensitive about what's going on, right? We all have to protect ourselves and our health and all that good stuff. And we got to figure out what the next step or the next healthy step is to take before you pursue any business opportunities or personal opportunities and goals. This is just to keep you informed on what could be coming up for you to be prepared. And again, take advantage of, somebody else's fear. What was that saying? Oh, I have it. I I'm drawing a blank right now, but I'll let you continue.
Was it something along the lines of, fear met with confidence or something equals opportunity?
Yes, exactly. Something along
Yeah,
those lines.
something. I'm
Take
sure someone
advantage of
said it
somebody
better than
else's
us, but
fear, right?
yeah, I mean, Warren Buffett is the best example in our
That's the
country of
one.
someone who's taken advantage of that, right? I mean,
Yes,
when people are fearful, be greedy. When people are greedy, be
that's the
fearful.
one. Exactly.
Um, and again, most importantly, we want to stress safety and health and
For sure.
wellness during this time of uncertainty. But we also want to be able to understand opportunities may exist for people that that can kind of see through that stuff.
For
But
sure.
I'd like to ask you, Chessie, I mean, in terms of what you see in terms of how this may impact the real estate market, what what do you see there, short term and long term, and what questions are you getting that you can help the community and your clients better understand?
Well, in the short term, what we're doing, we're taking a lot of precaution, of course, to protect our clients' health and at the same time expose their homes to the maximum opportunity that we can. So with that being said, is we're making sure that anyone that's coming to see our listings or wanting to come see our listings at this time, they use sanitizers. They wipe down everything they touch. Prefer they wear gloves if possible. Before they even show up to the homes, we want to make sure they are pre-approved. We've seen the pre-qualification process, proof of funds. We want to make sure that they're the right buyer for the home. We ask a lot of questions, minimize anyone that just wants to look versus somebody that's qualified for that home. Obviously, open houses we can't do right now, but we're doing virtual open houses. So especially when our homes are vacant or where clients are not exposed, we're coming and videoing and doing virtual open houses live so we can answer those questions directly to anyone that's inquiring or interested in that particular home. So we're
Yeah.
trying to, continue our business as usual, obviously digitally, right? With all the tools that we have today.
Yeah. And in terms of helping the community, from a real estate perspective, what are some of the things you're doing to help people stay more informed and make better decisions in this time of uncertainty? Because we know that, emotion without education
Right.
creates a lot of, bad kind of knee-jerk reaction decisions. How are you helping people manage the stress and pressure and anxiety of all this?
Well, all you can do is just continue to hold their hand and provide information as you get it, right? And
Yep.
continuous communication. It's really important that we touch base at least a couple times a day to make sure they have any questions, provide them feedback, anything that we're experiencing. We want to make sure we're sharing. Because silence, it could be brutal, especially in times like this.
Yeah, there's no such thing as over communicating
Right,
when we're all sitting at home with our kids
right,
screaming in the background.
for sure.
Well, good. Well, I appreciate you having me on, and
Yeah, of
for
course. Thank
everybody
you.
listening, if we can help at all, we'll include a link to our calendar if you want to schedule time to chat with us about anything financially related. And I'd highly recommend doing the same thing, anything real estate related for Chessie and her team. Just don't settle for uncertainty, right? You deserve to know what you can do and what you should do and how to manage this time frame. And there are people like Chessie and I who are willing and able to help, and not selling anything. We just want to make sure you
Right.
guys know what decisions to make and how to make them.
And guys, Ryan provides a very excellent consultative approach with the process. So again, he's not there to sell you anything. He's just there to kind of walk you through what to expect, plan ahead. If it's something that you're thinking down the road, whether 6 months, a year down the road, he's excellent at walking you through that. So that way you're better prepared to achieve that goal when the time comes and it's the right time for you, right?
Yes, ma'am. We're
Thanks,
looking forward
Ryan.
to helping anybody there. So thank you guys for your time, and we'll chat soon.
Thanks. Great. Appreciate it. Bye.